Hello, everyone. Mike Arnold here, co-founder, trading partners along with Bob Iacino. How is everyone doing? Hey, Waka thinks there's going to be a rug pull. What pattern is the rug pull? I need the pattern. Bond second day in a row now to me confirms that bull run is BS. I wouldn't call it 30-year screaming. I wouldn't call it screaming necessarily. Again, you got the long end of the curve still yields. Well, the 10-year is interesting. It's almost like something else is going on. Hey, vertical dimension. I think the market's going up in its last fake out, and we're about to see a mega drop. Well, there's Waka's perspective. Vertical thinks we could push to 39 to 4. 3,900 to 4,000. Rich has strange day. Interesting on the VIX today. Good afternoon, Patrick. Hey, MJ. Hey, Daniel. So, let's see. MJ's one to see if 3,800 holds. I don't know if it was an epic day. Hey, Eric. All right. We got through greeting everybody. And so let's see. If you want to be greeted and part of this wonderful community, please do subscribe, hit that bell, or ring that bell and hit that like button. Ring that like button and hit the bell. Just go ahead and hit that bell. There we go. All right, let's just recap some stuff today, then we'll get into the charts. We already covered the Fed National Activity Index in this morning, but then after the open, the S&P Global Composite Manufacturing and Services all in contraction. Continued signs of continued slowdown. The services PMI, that was a pretty big drop. That was pretty big, but hey, let's just shrug it all off because that means the Fed's going to, I don't know, 50 is the new pivot. And then we just had the auctions go off today. Megacap's pretty strong. Don't look at Chinese stocks. They're getting the crap beat out of them. I guess Megacap's pretty strong except for Tesla. And actually, basic materials sort of got hit today. Other than that, that's about it. Healthcare, nice rally here if we look at our little thing. Consumer cyclical got hit the hardest. Energy, basic materials down a little. Still looking for some plays in basic materials. Not touching real estate. Financial still decent. Healthcare is still decent from the sector overview. That's technology pretty muted today. So FOMC still 97% for that 75 basis point. It is baked in for next Wednesday. The only thing I'm watching for this is now we got the put calls. This 4,000 is a very key magnet point. Do not ignore that from a continued rally from Gamma plays for a continued rally. Fear and greed in neutral mode. All right, done with that. Let's see what's tomorrow. In case you didn't tune into the Sunday show where we go over every day of the week. Tomorrow, before the open and house price, everybody knows houses are in the toilet. So there's nothing much. It's just how much it's going to interesting enough. Consumer confidence coming out. That could potentially move the market a little. If it's a big miss or a big beat. Other than that, not expecting much out of that. Then you got the minor Richmond Fed indices. Are going to see if that goes into contraction also. But overall, pretty quiet day tomorrow. Pretty quiet. Earnings. I did not see Discover or Logitech before I started to stream. I looked at it earlier and they weren't out yet when I looked earlier. Tomorrow, that's going to be very key from an economy standpoint, inflation standpoint, and their view on the holiday season. Coca-Cola, I'm actually interested in that. Is still not a value play, but I am interested in that from inflation and how much they can pass on to consumers. GE's been an for years. Anybody who says GE is a big thing is not watching the markets anymore. You got 3M and Raytheon. But then tomorrow after the close, Microsoft and Alphabet, Visa, Chipotle, Spotify. You got some more things after the close. But tomorrow, do not shrug off UPS if they give some very strange guidance information. That could potentially be a little market moving there if they issue some really weird guidance or if something's really strange with their earnings. All right. That's it. That's it. We're done. Nice talking to y'all. So let's see. Where'd I leave this off? I mean, the people not buying insurance right now, that was very interesting with the VIX. We got the little slight drop off at the very end of the day. Here's, starting at about after 2:30 Central. Other than that, it held up pretty well. Little slam into the close on the VIX. But this was not a super, for the amount being up 100 basis points in the S&P and Dow, NASDAQ was up over 100 basis points, now trading at 89 basis points. This was very weak sauce in the VIX, not confirming from my standpoint the size of this rally at all. But it's still real critical, this 28.50 with the 50. So that's what I'm still focused on. This has to start breaking down to really confirm this rally. I'm not saying the market's overbought yet. It's at cycle tops on the daily. It's not overbought yet. Not from my measures. It's getting closer in a short-term basis, but remember, it was oversold for a long time. Also, S&P tapping off the 50 today, so the 50 got softened. Generally, the first move will not close above or below the 50. So in this case, it would be above. Just in case you were wondering why I have harmonics on there. After we stalled out near these Friday high or overnight highs, I guess you could call it. After we stalled out there, I put on the little reverse harmonics from the lows at 3 a.m. Central back to the Sunday opening high range to give me this 38.22, which was a key area with that 50. Why'd I do that? Because needed tighter targets since it couldn't break the highs and we weren't really going to make a run for that 38.38 area. So I used the reversed harmonics to try to pinpoint a little end of day move. For all of those who are wondering, yes, the potential double top, which never even came close to triggering, is still in play today. In front of that, key support now. We have some of last week's highs with the rising 4-hour rotation zone, which is well in front of the potential double top. So on any pullback, come on, mouse, don't fail me now. On any pullback, I'm watching 37.75, 37.70 for overnight, any pullback action. Other than that, pretty decent actually pullback into the close, coming back to the first level of support, this 3800, 3801. So we break below that 3800, 3801. Minor would be about 3787, but the major I'm watching is 3770 with the rising 4-hour rotation zone. That is key. And then if we get that 4-hour close below 3736, I'm watching for the bigger pullback. Until then, that would just be a little pullback to retest a key resistance becoming support area. So that's where we sit with that. And that little double, if it gets a bigger sell-off, could take us into still an even bigger potential, little bigger potential double. Still a little bigger potential double, maybe. Let me double check on that. Yeah, so it looks like it's still potentially valid. I'll have to double check that one. NASDAQ, The NASDAQ, this is not a potential double top, according to our definition. Why? Second and third targets. Third target is below the move to start it. Second target's into the wicks, even if you dial it down to the 1 hour, into the wicks. What does that mean? It means I can't use double targets. Also, if we did get a breakdown below this key low, all right, here's what it means for my target. So we probably triggered a double in the S&P, but the targets are virtually the same as what I talked about this morning. 11,156. Then we have, technically on that 4 hour, you got the clear path, but we have some pretty strong resistance. I'm going to bump up this level just a bit. The next technical area would be 11,090, and then it would be to the recent swing lows. So I can't use double targets, but there is some different stopping points within that can be used for short trades. Now, and this is not another double. The next target, if we did break below this 10,915 area, would be back to 10,728. So, to the upside in the NAS, key resistance is this 11,550, but 11,550, the next target area, if we get above there, because you got the declining 200, a key little level here, that's the black line, and a harmonic, all out there, 11,550, then 11,668, then 11,763 to the upside. What do you think? Big banks and funds going to front run treasury buys or stocks? I think more for stocks if I had to guess. Stocks are easier to move. The treasuries aren't confirming this yet, though, from a rally standpoint. So that's what we got. Dow. Remember, we had the double. We had the double from before this double bottom. We hit the first target, remember, overnight. And the second target is hit. Hit. Blip-diddy blip, blip, blip. 2 tests of it right there. This is not a double top again. Not reversing a big enough move. So if we have the breakdown key pattern, it would be 3,100 essentially would be the targets. This also, goodbye. And then you'd have to do the same thing if we broke down below this low. You'd have stopping points of roughly about 30,724, 30,544. I will run this level up to that key area. That's about it. For the Dow, though, the next key target area is 31,975. And I will be watching for any pullback. Remember, cycles are at the top on that daily. I'll be watching, especially if we break below about 31,260. I am targeting 30,916. But this would only be... And the probabilities are still for higher prices. Russell was just a big today. Confirming the double still is in play unless we push up again, but not triggered. So that's about it. Other than that, the Russell just sitting in consolidation. So that's the last one I'm looking at. The DAX, not much. Still double target, still in play. Nothing's changed from this morning's update. The notes. Confirming the double, triggering the double with first target, but this can still be, for the aggressive trader, can still be using, again, that target 109.15 area. For the first target, again, for any shorts, 109.09, 109.09 and a half, 109.04. Still watching to see if we close at least on a 1 hour time frame below 109.14 to confirm a retest of the low area. Dollar index. Dollar index closing back into the support channel. Remember, this spike down was from the intervention. So, dollar index shrugging that off, trying to rally back a bit, but closing back in this consolidation. So there's not much unless we start breaking above 112.28 from my perspective right there. If we do break below today's low, I'm targeting 110.47. We already touched on the VIX. Crude. Had this little, so I talked about that in the morning, just boom, boom. Had to be real quick with that. Other than that, there's not any great patterns. Besides, unless we get at least a 4 hour. This is still a double bottom. Unless we get a 4 hour above the high here, close above 87.14, then we can get some upward pressure. Where else? Natty gas still. Finally, a little key reversal would be a super aggressive percent B buy just back to daily rotation zone. Nothing worth from the standpoint of risk reward, so that's not even good to do. Yen, I am keeping an eye on, but it was stayed in a very tight range. Breakout area at 149.55, breakdown 148.75. That's it from our double intervention moves. But that can't be heartwarming to the Bank of Japan with recovering and now holding above that 50% level from the sell-off. Euro, little strength in there. Still not interested again unless we can get above the 50. Pound, the key area is at 50 also. But there's not much going on. Bitcoin's still caught in the range, so nothing going on there. The Tesla 198.52 was the first harmonic. We hit 198.59, and then the bounce back. Pretty aggressive bounce back play. Not quite the full gap fill. So still going to be watching for that tomorrow morning, and then you have another gap should it stay strong. As long as this remains above about 204, there's nothing going on to the bearish side just yet. Hello, options 22. Let's see. I'm here late, but VIX looks interesting right now. Looks like a bull flag in the daily. Yeah. That's a really crappy flaggy pattern. Don't like that whatsoever from a flag pattern. We just clean up this chart. There's just not a lot going on with the VIX just yet. This is going to be the key, 3190 roughly. First area that starts getting bearish. Anything below there would just be minor. All right. I want to glance at UPS. We got earnings tomorrow morning. I have not updated the chart in a while. So I just want to glance at this. Going into the old earnings, there is no fantastic pattern. The only thing would be the upside target is with a gap fill in the 175. The downside is key support unless they give something completely disastrous, and then your key level is 156. Other than that, it's about 159. So there's just no, some of these are just, remember, if there's no great pattern, there's nothing to do. And there would be nothing to do from a oops perspective. Just want to peek in at Coke also. Coke is a different story. Coke on the break today this is a pretty bullish area. So into a clear path move. So on strong earnings, I'd be watching for a return to about 59 with a key stop about 56.50. Was this a little double from here? Yes, it was, in case people were wondering. And since the overall long-term trend is down, and by the way, this confirmed it, but it was not triggered into this candle. For those trying to learn the pattern, you need a green close on a double bottom. This was a gap open, closing back down. This was a red close. This was the green close. This pullback did not invalidate it, and it's essentially done at this point. But the next key level is 59. Hope UPS pulls a FedEx announcement. Well, if they do that, if UPS pulls a FedEx, watch out below. So that's where we sit. That's really, I mean, just double check. Tomorrow's really going to get stuff going. I was just seeing if I was forgetting anything else. Not really. I'm going to keep this a little shorter session today. GM. By the way, this is not, it is confirmed but not triggered. This is a valid double bottom. Not triggered though. So that will be interesting with earnings. Confirmed, but it did not close above there, so no trigger going into earnings. I already looked at Tesla. We can jump back around. Tesla is really, you got the little remaining gap fill, then the other gap fill. I'll just cover it again. So if we stay in rally mode tomorrow above about 214.70, if you want to be conservative of 215.50, then the other gap fill. This has a little way to go, but there's not enough. If you weren't in it already, there's not enough left from a reward to risk standpoint. The key thing I'm watching on any pullbacks after this pretty strong area is only if we break down below 204.18. We break down below 204.18, then it's definitely leaning towards the short side again. Daily cycles are at the top, and you are against the rotations zone. So even this other gap fill back to the close on Wednesday, October 19th, I'd be watching then for another key rotation back down. The only short-term thing is you have the little bullish divergence here, but you're slamming into the daily rotation zone. And also you still have major overhead resistance levels. All right. Just want to see now the futures are closed. Could not, let's see. I want to look at, this is where I like to look at the line chart. So it is a new close above the Tuesday, October 4th highs. So we did on a closing basis exceed the October 4th highs just by a little. That was important from my standpoint from a technical short-term continuation. Does not mean you might not get a pullback with cycles at the top, but now it's made a new closing high. a new closing high higher than October 4th. So on a closing confirmed basis, now we have a higher high on a closing confirmed basis. So even on a pullback, as long as we start making a higher low on the closing basis, and your key low on the closing basis is back from Wednesday, October 12th. So even on a pullback, nothing invalidates yet the higher high, potentially higher low yet. And I know it was mentioned earlier, the 3,900 to 4,000. Yeah, this thing could even technically hit closer to 4,100 before a potential rally's over, as long as we don't get major technical damage. It's just what I am on the guard, though, just for I know we got lots of bears in here, including me, long-term bear. I'm watching after we tagged the 50, though. I'm watching for a little choppier to pull back area to reset this cycle. So I would not be chasing anything from my perspective higher at this point. It would be raising stops from any earlier longs and being patient for any new longs. The thing that would shift I'll touch on this tomorrow morning again, the only thing that will shift me intraday is if we slam through this 50 area, this 50 exponential moving average with momentum, then intraday that would be a hop on the long trade. Other than that, very patient. Oh, gee, really? GE? Ugh. I mean, this finished the double also. That finished the double today, tapping the 62.5. No gap fill yet, just there. So, I mean, it's interesting because you got earnings tomorrow and the pattern finished right ahead of earnings. Be interesting to see. I'm going to leave this on the chart, 70-75 area, which is the key support with the rising daily. So even on a gap down, it'll be interesting right there. But other than that, if it's strong earnings, see nothing closed at the daily at that. Nothing closed at the 4 hour. And those are the two you'd want to use for any key earnings play. I mean, if you do get some strong earnings, the next target would be 78.78 with the declining 200 area. Now, this one is overbought and cycles at the top. So this would be one based off of this and a pattern completed, and I have no holdings in GE. But this would be one, when it completes a pattern right before earnings, it's out for me. It's out. Hey, I'm not holding anything into an unknown earnings when a pattern is completed against a key level without that close above the 62.5. So this would just be analysis. This is the kind of stuff I'm just using for teaching. If I got to this in whatever stock, if it was a stock I was holding into earnings and I did not get that close above the 62.5 and it completed a double, taking profits, walk away. If it pops in earnings, oh well, it wasn't my trade. Who cares? Next. All right. With that, thank you, everyone. A quicker. You're welcome. Eric, Amazon only down 70 cents. I'll start peeking at Amazon closer to Thursday. Rumor. What rumor? All right. Everybody have a fantastic night and bye for now.